Good morning. I'm Aninda Kara, Product Director of Global Investor Group, and it is my pleasure to welcome you today to India International Derivatives Conference. Today's agenda will consist of 2 panel discussions and a few short presentations. At each session, we will hear from industry leaders who will be discussing the most pressing challenges facing the industry today. Before we begin, I'd like to thank all of our speakers who will be contributing to today's sessions and also express our deepest gratitude and thank you to our sponsors who are DBS, B3, Citadel Securities and TMX Group for their support. Our first panel session this morning will be evaluating the growth opportunities for local and international interest in the Indian market. Moderating this session, I'm delighted to welcome our panel moderator, Saidutt, who is Managing Director at Squawk and Redbox News Terminal. Squawk is an Indian financial news service specializing in Indian news in real time. Sai heads Squawk's India division and that services local traders and brokers. He has 12 years financial market experience in both Indian and global markets. To discuss this topic, Sai is joined by an expert panel from Citadel Securities, BNP Paribas Securities Services India, Aviva Investors, TMX, which is the Montreal Exchange, and the IFSC Department of GIFT City. Our speakers today will be delighted to take your questions, and you can definitely interact with them you can do so by entering your questions via the Q&A function on your screen. Every session is being recorded and will be available on demand. I'd like to hand over to Sai to get the session started.
Thanks, Aninda.
Over to you, Sai.
Yeah. A very good morning, and I would like to introduce, so today's topic would be the first discussion would be the evaluating the growth opportunities for local and the international interest in the Indian markets. I have 4 panelists with me, which is David Helps from Toronto Montreal Exchange. He's based in London. The second is Vaisshali Babu, who works for BNP Paribas. Third is Jonathan Finn, working for Citadel Securities. And fourth is Sandeep Shah, who is working with GIFT City, Gujarat, which is based in India. So let's start with a brief introduction of all of us. So I would like to start with David Helps, David, just give a brief, introduction about yours and your exchange and what you do. Over to you, David.
Thank you, Sai. Thank you, FOW, and thank you for the rest of the panel for enduring me for this next hour. My name's David Helps. I head up international business development for Montreal Exchange, which is part of the TMX group. I've been at the exchange about 4 years. Previous to that, I ran fixed income derivatives at Life, now owned by ICE, and previous to that, I was a short-term interest rate trader for 20 odd years. As I say, I've been at the exchange about 4 years. I think 4 years ago, I would have spent the first half an hour, explaining where Canada was, but then trying to explain that we actually had this wonderful marketplace for trading. I'm looking forward to sort of speaking to many of you over the next hour, because things have changed vastly since that 4-year period. We count the Indian trading community of some of our largest participants on the market, which may come as a surprise to many of you out there at the moment. But just very briefly, for the uninitiated, the Montreal Exchange is part of the TMX group, the wider TMX group. We're an integrated multi-asset class exchange group, to quote the script. We operate cash and derivatives markets across equities and derivatives products. The Montreal Exchange itself is Canada's oldest exchange, actually, and it's the sole marketplace to trade Canadian derivatives globally on exchange. We list equity derivatives such as S&P TSX 60, our flagship stock index. We have some newly listed indices on ESG, cannabis, dividend futures, and single stock futures as well. And on the fixed income side, We have a suite of yield curve products from short-term interest rate products out to 10-year CGB contract. So I'm looking forward to sort of answering questions about those and giving you some insight on those as time goes on.
Thanks, David. Thanks, David. Our second panelist, Jonathan. Jonathan, could you please give a brief introduction about yourself and your company?
Sure. Well, thank you very much, Sai, and thank you to FOW and the Global Investor Group for having me on this wonderful panel today. So I am Jonathan Finney, and I head up APAC Business Development at Citadel Securities. In this role, I am responsible for identifying opportunities for global growth and expansion across markets and into new diverse product lines, including handling exchange, broker, and vendor relationships. Citadel Securities is a leading global market maker, trading on over 120 venues across more than 35 countries, with a leading presence in multiple asset classes, including equities, options, fixed income, and FX. Prior to joining Citadel Securities, I worked on the buy side for 11 years at Fidelity International, most recently as head of global systematic trading, overseeing the firm's low-touch and algorithmic electronic trading development.
Thanks, Jonathan. Our third panelist is Vaisshali Babu, who is working for BNP Paribas. So Vaisshali, could you give a brief introduction about yourself and your company?
Sure. Thanks, Sai, and thanks FOW for this opportunity and having me here. To be very quick, I am a lady with 28 years of experience into the capital market, extensively working in the security services space, working a lot with the regulators to bring in the efficiency of the Indian capital market. Talking about BNP Paribas, we are the 5th largest global custodian and being present in India since 2011. We have been present in India for last 160 years, spreading our services across security services, IB, MNC, transaction banking, and FIC. So it's a one bank approach, which we really cater to the clients, and very, very active in thought leadership material or the programs with respect to the Indian capital market. I'll pause here.
Thanks, Vaisshali. And our fourth and the last panelist is Sandeep Shah, who is working for GIFT City Gujarat, which is a Government of Gujarat initiative. So Sandeep, could you give a brief introduction about GIFT City and yourself, please?
Thank you, Sai, and thank you, FOW, for having me today. GIFT City, basically, I'm sure many of you know, it's located at Gandhinagar, which is the capital of state Gujarat. I head the IFSC department at GIFT City, and this is the initiative of Government of Gujarat and supported by Government of India to create a platform for the financial services entities, to access Indian market as well as the global markets. Being a greenfield project, we have actually implemented various state-of-the-art infrastructure as a part of the city. And we work very closely with the Ministry of Finance and the regulator in GIFT City, which is IFSC authority, to bring out the regulations and the tax at par with some of the other leading jurisdictions and provide an ecosystem for the financial services player to operate from this zone. Look forward to have a fruitful discussion today, and over to you, Sai. Yeah, thanks.
Thanks, Sandeep. So now we'll start with the session. So our today's topic is the evaluating the growth opportunities for local and international interest in the Indian market. So the first question which comes, first topic which we can all discuss about understanding how India's growth has impacted the global market in the past 2 years. We'll talk about the COVID started in the year 2020 in the March. Okay, and after that, things have changed for everyone, not only financial market, but we will speak how it has changed for India and for global. So what are the changes which have happened, and how it has impacted India and global markets? So I would like to start with David. He can talk about what are the changes which has happened after COVID, and what are the changes in the financial systems or the exchange stuff. So you can give a brief idea about it. David, over to you.
Yeah, thanks, Si. It's an inevitable question, I suppose. It's been such a challenging 18 months for all of us, and I know we've all been a bit panelled out over the last 18 months and had this same sort of question, and it's the same sort of rhetoric. But from our perspective, I mean, I'm based in London. We bought a company called Trayport, a gas and power platform, back in 2017, actually. I was in India at the time when I got the call that the deal had gone through. And so I sit in that office. We're still not back to work on a day-to-day basis. We don't have any plans to fully go back globally, actually, but particularly in London till September at the moment, at the very least. So I guess what I'm trying to highlight is, you know, this is the back end, we'd like to think, of these challenges. I think take us back a year. The biggest challenge for us on the exchange side was just everybody seemed to be thrown to the wind, you know, globally, and particularly, you know, the trading community I found in India. You know, we service a lot of prop trading guys that generally sort of sit in an arcade style office that we're all aware of. And, you know, hundreds of these guys suddenly were just having to set up in their bedroom, and it's not just in India, but obviously we're focusing on India today, but having to sort of sit in bedrooms with screens, and then there's all sorts of risk associated with that. And being, as I suppose, you know, we're not the primary exchange to hold our hands up. You know, we're not the primary exchange for many trading firms and individuals. And so the risk element played a real problem for us, a real part, and created a real problem for us in the volumes, quite frankly, as well as the fundamental side of things, where we saw the drive down to ground zero in interest rates, you know, just to try and keep businesses alive globally. We did see this physical problem that suddenly I'd speak to some traders and say, David, look, you know, where we were looking at 12, 20 markets as an individual, now, you know, the risk are only giving me a handful of markets. And unfortunately, you know, you're not one of those at the moment. And that was the biggest challenge for us. It created, you know, real problems at the front of the curve for our interest rate products, as other exchanges as well. But real problems, to the point where I did worry, I think, come September last year, that we would ever recover from those. Since then, we have recovered greatly. As many exchanges have. You know, I think, you know, we're well up on volumes year on year now. Many, you know, I could quote all sorts of numbers and things, but they're all on our website, so I'll let people look at those at their leisure. But I think the problems, really, we are still seeing some change-wise, not too much on a day-to-day business front. I think, you know, I think if things that have carried on as they were sort of March or just after March, sorry, May, June, July last year, then I think we would have some drastic changes, and my rhetoric could be very, very different now. But things have recovered well, and we're off and running again. Well, I like to think we're off and running again. You know, I was very, very saddened, obviously, to see the problems that you guys had out in India. Over the last few months, and you know, things are recovering. I know there's talk of a second wave and that, but hey, you know, let's hope that we're on the up. The vaccination program is rolling out nicely globally now, so I'm hoping that things are going to be recovering. I think from an exchange perspective, you know, I'll talk about this a little bit more given the opportunity, but, you know, we are one of the few nations at the moment, I think, that are actually looking to raise rates, or the talk is that we are sort of in an upward rate environment. So for the fixed income traders out there, the interest rate traders out there, that's going to create some volatility in there. And I'll be happy to talk about that a little bit more, but over to somebody else now, Si.
Yeah, just a last staff question. What is the change in your exchange volume before COVID and after COVID in this 1 year? What is the change?
Yeah, we're up about 24% year on year, Si, actually, on volumes, and actually pretty much the same on open interest growth as well on our flagship products. So it's 23% on the open interest growth as well. So it's very, very healthy. And I'm happy to report, hence I'm sitting on this panel, that much of that is down to the Indian trading community. We have a wide array of trading firms out there in India that supported our markets, and we'll talk about the strategies given the time a bit later, but one of the things just briefly I want to point out, you know, I would say give Canada a go. You know, our bigger brother just south of the border, and if you're trading those markets, you know, we are certainly seeing a lot of relative value trading, for example, against the dollar products on the curve and some of the Aussie products and New Zealand stuff. We're seeing a lot of that, right from an individual trader in London up to a hedge fund, a European hedge fund or US hedge fund. So, you know, have a look at Canada. There are some opportunities in that market. It's far smaller, but there are some quirky things in the machine engine and things like that may suit some of the trading community. But yeah, we're good with the volume side, actually. As I say, the rhetoric I thought was going to be very, very different if you'd have asked me that a year ago.
No worries, David. So my next question is for Jonathan. So Jonathan, as a leading global market maker, what stands out about the Indian markets and what makes them attractive to the electronic market makers?
Sure. So thanks very much for the question, Sai. And it actually does lead into the same kind of like overall topic, which is basically how has India's growth been how has India's growth impacted the global market? So over the last couple of years, India's growth has been incredible. Part of this can, of course, be attributed to the general retail growth theme that has played out during COVID-19. But there are other factors which make me very optimistic that this growth in particular in India is sustained and permanent. So you have the rise of apps and online trading, of course, which have allowed retail to rediscover financial markets. And the rise in these volumes also shows just how much investment in technology has become such a necessity for the exchanges in question as well. So what makes these markets attractive to an electronic liquidity provider? There are three particular factors that I guess I would highlight. From an electronic market making perspective, technology is critical, right? India has multiple exchanges, of course, and all have actually done incredibly well in investing in technology. A critical example of this would be the implementation of self-match prevention at exchange level, which has helped reduce the operational risk and cost to each individual participant. And you'll hear me talk about this a lot, which is basically that ensuring that these mechanisms are at the exchange and that there is an investment in technology reduces the barriers to entry for many, which ultimately makes for a better market. Another critical factor is product development. So exchanges in India, and I'll single out NSE in particular for this, have done a great job building out all their multi-asset functionality and balancing the demands from retail with other participant types who would be providing the liquidity. There is also always seems to be a new product in the pipeline, and this is a positive as they help tailor the needs of the customer to the markets as a whole. So, for example, products like Nifty, Bank Nifty, with monthly and weekly contracts on the derivatives, all help make hedging simple and effective for the underlying participant. So product development, again, is another reason why the Indian market is attractive. And thirdly, and most importantly here, it is engagement. Engagement at both the regulatory and exchange level really helps drive progress and helps evolve the markets to be, on the one hand, incredibly resilient and robust, but also, on the other hand, flexible and low cost to ensure no unnecessary barrier to entry exists that blocks participants from coming to the market.
Okay, thanks. Thanks, Jonathan. So my next question is for Vaisshali. The first question, Vaisshali, I would like to ask you that why should the investors consider investing only in India?
Great question, Sai. And I'll take the link from Jonathan's point, very well said. You know, the approach of the overall government and the regulators. Jonathan did mention that there has been a very healthy discussions with this, and I have been really privy to many of that. The first thing which comes to my mind as a foreign investor, and why should anybody look at India, is that there has been a stable government. Let's give a fact that India is a huge democracy. And over the last almost 8 years, there has been such a strong, stable government. Stable government means steady policies, continuity in the policies. And this really gives a lot of comfort in terms of the foreign investors who are investing in India. And I see this as a very big point. Second, again, the Jonathan's point that there has been a continuous engagement with the regulators. I remember, like, I have been in the market for really more than 2 decades, and there was a time when anything going to the regulator, maybe we may not be able to present our facts, but today the regulator is giving its eyes, ears open to what the investors want. It's not that 100% whatever the investors want, they are giving it, but they're really finding the golden mean between what is really good for Indian economy and what is good for the investors. So I see this as a very second point. And I will just share some of the facts, which really goes to say, like, ease of doing business. Now, this has been the mantra of the government as well as the regulators. It is a top-down approach. And India was ranked at 142 in 2014. In 2020, it has reached up to 63rd place of ease of doing business. So you can see the jump. And if I have to believe the World Economic Outlook, it is expected to go to 30th place by 2030. So see the speed at which it is going. And hence I see that, yes, it is the destination that nobody can ignore it to be. Let's take again some pure economic factors. Let's see the GDP by the purchase power parity. We are at 9.5 trillion in 2020. And World Economic Outlook says that we should be around 12 trillion in 2030. So this has been the key things which really makes Indian market attractive and a destination that the major investors across the globe definitely cannot choose to ignore. That's what I look at it. And maybe I'll pause here.
Okay. Thanks, Vaisshali. We'll speak out in more about foreign investment in the country and ease of doing business. Before that, I would like to Sandeep. Now, very important. Now you work for GIFT City, which is the government of Gujarat initiative. As the participants are mostly traders, brokers, exchange. Okay, so we'd like to know what are the developments after COVID, before COVID. So the 2 exchanges I know were set up in 2016 and 17, which is the BSC and the NSE. They set up the first offices in GIFT City in Gujarat. So what are products, exchanges, participants, in this last 2 years you have, who have invested in GIFT, and what is the participation of hedge funds, exchanges, companies, brokers, traders? How is it going? So if you can explain that to us.
Yeah, thanks. So I'll give a kind of half a minute in terms of the available ecosystem at GIFT City, which includes the banking, insurance, and the capital market. So GIFT City today focuses on the 3 main sectors, which includes these 3, and these 3 sectors were earlier regulated by the existing regulators in India, which include RBI, SEBI, and IRDA. And now we have a unified regulatory body, which is IFSC authority, which regulates all the financial services activities in this zone. As you rightly mentioned, Sai, we have 2 international exchanges present today, one led by BSE, Bombay Stock Exchange, and another National Stock Exchange. And both of them have been doing great. Fortunately, in the last 2 years, we have seen a tremendous growth in terms of their volumes, basically. The good part is these exchanges are like a single platform, so you don't have a different segments. The one single exchange provides a platform for equity, the commodities, currencies, and debt as well. So investors just need to enroll and can have access to the multiple products within the same platform. What we realized, and based on the various interaction with the participants, that the consistency and the ease of access would play a very important role for them to actually decide the location and a platform to trade for. And that's how we worked very closely with Government of India and the regulator. And what we did is we provided a very easy access to the first foreign portfolio investors. So what the regulator has said, if you are already registered FPI in India, you don't need any additional documentation. You can directly access the IFSC market. And second, if you are not registered foreign portfolio investors, you can come as eligible foreign investor, which is a new category recently permitted. So, and the top to that, what has been now permitted is the eligible foreign investors would not require to register with the income tax authority as well. So I think that kind of ease of access helped us to attract a lot of foreign investors in the IFSC. The volume, which used to be a very $2 to $3 billion a day, has now touched $11 billion plus on a daily basis, which is mainly from the index derivatives and the commodity derivatives as well, both future and options. Along with the exchanges, there are 50 plus capital market intermediaries as well who have set up their shop here and they trade on this exchange platform. And we are coming out with various new products. I think we can discuss much in detail on some of the investment products that we are planning. Yeah.
Okay. Thank you, Sandeep. Thanks a lot. So now my next question goes to David Helps again from TMX. So David, what are the new products the exchange is looking at? We have seen, I have personally seen in India, people are, when after COVID, when the Indian market fall, it was 7,550 when people start again investing. People are getting, more into US markets as well. So I have seen many broking house, the Indian domestic broking house, giving access to US markets as well these days, and there are many. So Indian brokers, Indian traders are not only keen to trade Indian markets, but they are also looking at the US markets, which is the US equity market, cash market. So David, my question to you is, how is there any plan for TMX, to set up anything for India or to give access to the cash market? Obviously, you have a good base in India for the derivatives market, the futures market, the bond markets, which good volumes come from India. But what are your plans for cash markets for the Toronto Stock Exchange or Toronto Montreal Exchange cash segment, which I think India can trade, because we are good in trading cash and futures markets. So what are your plans? And if you can explain those stuff.
Yeah, thanks, Si. Before I answer that direct question, you touched on a real point that I just want to highlight a bit more. Capital markets have become more globally connected in recent years, quite frankly. There's still a need for domestic funds. Institutional retail investors, though, are looking to diversify assets. A good example of this, just before the current COVID situation, I was down in Australia, and we've been doing a lot of work with a lot of the buy side houses down there. A lot of the large sort of pension funds down there, the supers down in Australia, they're very similar to the massive sort of pension funds that drive our Canadian markets domestically over here. And they've been very, let's say, parochial historically, very locally sort of concentrated on what they invest in. And one of the things that was very clear when we were down there was the internationalization of what they are now looking at. They're looking at assets outside their own borders. So it's very interesting that you've picked up on that from India as well, because it goes right down the chain, and we are seeing a more diverse approach from your asset manager right down to your guy sitting at home that's pushing buttons and trading the markets. So I'm very, very excited about that. We are, as a result of that, or we have, I should say, we've just set an office up in Asia, in Hong Kong, just down the road from Jonathan on the panel here. So we are very, very committed to pushing our products, which I will come on to in a second, Si, pushing our products out there and giving more international opportunity, I suppose, is what I'm getting across. I started off by saying, people weren't quite sure of this weird and wonderful thing called the Montreal Exchange and what they offer, but we do offer things to trade against existing product lines. I think on the interest rate side of things, the key thing for us, we don't launch hundreds of products like some of our peers. We don't throw a load of mud at the wall and hope that some of it sticks. We're very, very conservative in what we offer. Some of the new product lines, we've seen a big drive in single stock futures which will be of interest to the community in India. A huge drive there in that, and a huge uptick in volumes there. We, on the interest rate side of things, for many moons, we didn't really have, quite frankly, a full interest rate curve. We had the BACS, the BAs, which is our short-term interest rate suite, and then really we had a 10-year, quite frankly. So we were missing this big chunk in the middle, the 2 and the 5-year, which you see obviously on many of the other big exchanges and the other dollar-denominated in particular exchanges. We now have a 2-year, a 5-year. The open interest has just ticked over 100,000, incidentally, on the 5-year. So it's now of interest to some of the funds in there, and we're hoping for great things there. You know, it's a huge part of the curve. 72%, incidentally, of all mortgages in Canada are linked to this part of the curve. So it's been very, very closely held in the OTC market by the banks for many years. We now have 2 banks themselves making markets for us in that on the derivative side. So it's a sort of sea change, if you like. And now we have the complete suite of products. You know, the short-term interest rate guys out there watching this at the moment, you know, we now have TED spread opportunities with the 2-year products against the BACS and the 5-year against the BACS. We list explicit spread strategies, 2s, 5s, 5s, 10s, 2s, 5s, 10s. We list packs and bundles trading on the BAs, on the BACS themselves. So there's a lot now in the pipeline, but we don't, as I say, I'm not going to come to you and say, yeah, we've got this weird and wonderful new product on air or water or whatever that gets listed every periodically is flavor of the month. I think of interest on the stock index side, we've listed derivatives of our TSX 60 product, a cannabis index, which created all sorts of talking points when we listed that. I think we first mentioned that at a forum in Singapore, and you could have like heard a pin drop on the floor as soon as I mentioned the word cannabis. I thought I was going to get carted out and arrested, but and we've like everybody else, you know, we've shown a commitment to the eco side of things. You know, we've listed ESG related products, an ESG derivative index product of the TSX 60, and a dividend index as well. The big thing for us that as well has sort of swept us finally, as it has the rest of the world, is a potential alternative reference rate on the interest side of things. You know, Sauron's eye out of Lord of the Rings has finally come to us in Canada, and we have launched what we call a Cora future based on the Canadian overnight repo rate average. We are still very much so a dual jurisdiction, so there's no plans at the moment for BACS to disappear, but that is sitting there as well, and we're keeping a very close eye. We sit on the working committee, the CAR working committee as we call it, to monitor whether we're going to switch over, as the US have done with SOFR and the UK with Sonia. We have our Cora product sitting there as well. So not too much on new product side, but a lot of development and building out on the current suite that we have at the moment. And the big thing, as I say, is our push into Asia and the 20.5 hours trading, which will launch on September the 19th this year.
Wow. So that's for Asian hours, right?
That's for Asian hours. I mean, 60% of all our business, but more than 60% comes from outside of Canada. You know, I would say more close to 70%. And for years, we relied on people being patient and waiting for us to open at 11 a.m. UK time. 3 years back, we launched extended hours in London from 7 a.m. to 11 a.m. UK time. And that now accounts for about 6% of our total ADV. So this has now been a stepping stone for us to launch fully into Asia now. So there'll be a full trading day for the Indian trading community.
Okay. So I have 2 questions from you, Dave. But before those 2 questions, I will, speak to Vaisshali. I'll come back to you. I have 2 good questions of interest, which I'll ask to you in the next session, in the next Q&A. So I would like to ask Vaisshali. So when she spoken about the investor consider investing in India. So now my next question is, what is the current status of foreign investment in the country, and how the ease of doing business have progressed for foreign investors?
Okay, thanks, Sai, for this question, and it's a really directional question, which I look at it. If you see the current status of the foreign investment in India, and especially it is coming from the basically three routes, that is a foreign portfolio investor route, that's FPI, and the foreign direct investment, that's FDI, and the foreign venture capital investment. And I see that all the three routes have been very actively engaged in terms of the inflows to India. Now, I think one thing, that FPI regime itself, that introduction of the FPI regime from the erstwhile FII regime was a big booster. Today, FEC, as of the March 2021, more than 10,000 FPIs are registered in India. To be precise, I think it's the last SEBI bulletin spoke about 10,186 FPIs active in India. And it has been a gradual change, and this has not stopped despite COVID. The pace has remained the same. And these investors, if we look at the assets that we as custodians, we are managing in India, the figures are in the range of approximately 600 billion USD. So that's the current status of the FPI investment. Let me just reflect on the different jurisdictions from where the investments are coming. Again, it has been coming from all over the globe. Of course, US being the primary source from where the investments are coming. Having said that, Singapore is not, Luxembourg, a lot of European locations, and of course, Mauritius, and those routes have been always the favorite routes. But really the dependence, it has been over the period. What has happened is that investments have been coming all across the globe. We as a custodian, when we manage the investments and the entry routes and all that, and we see that there is investment pouring in from all pockets. So the value has increased, the spread of the jurisdictions has increased. If we look at the foreign direct investment, and the last figures which I have says that they are in the range of 175 billion. Okay, and again, there are estimates. I read one EY report. They are going to be every year, India is expected to increase at least 160 to 170 billion of foreign direct investment. Again, at BNP Paribas, we see a good traction, on this, the foreign venture capital, which was actually for a long time, it was little lull, but we see a lot of investments for the ESG space, Now ESG is becoming the way of doing business. It's no more a CSR kind of a thing. And we see a lot of interest to this FVCI route into ESG kind of thing. Again, one last point before we really move on is that it's not only investment only in equity, even in the debt. And the debt market, when I say debt, is the sovereign debt as well as the non-sovereign debt, which is the corporate debt. We see a good traction of the foreign investment into these asset classes. So I personally feel that over a period of last 10 years, there has been a really considered positive momentum. And our indexes, Sensex or Nifty, where it only goes to show that trust and the belief in the whole infrastructure setting, the risk management, the control framework. So that's the way I look at it, the foreign investments in India.
Okay. Thanks for just a quick question, Vaisshali. What do you think with this recent SEBI's rule on margin stuff? A lot of brokers and traders are having issues in trading the cash markets, especially, and the volume have gone down in the last 2 months. The new margins coming up. So, what do you think? How will this impact going into the future? Volumes are good in the futures and options, but it has dried up slightly, the cash market, with the new margins.
Yes. So again,
and traders are angry. Even the National Association of Brokers have met SEBI Finance Ministry, but they didn't listen to them, and they said they have left on SEBI to take the decision. And SEBI is trying to curb and tight more of the stuff, the process. So how do you think this will impact going forward?
Okay. Here, very current topic-based question, Sai. And definitely what has happened is that today, like uh, whatever the controls are there in the derivatives, somehow, the regulatory mindset goes about it that we should have the similar setup and the same control and the same safety measures into the cash equity. And hence this whole margining, and then you have to showcase that margin. Otherwise it's not that the broker says, yes, I have collected. No, you have to demonstrate that you have collected. And that was really causing lot of administrative as well as a lot of work in terms of the lot of money being chunked here and there. But if you see yesterday's SEBI circular, they are just doing some bit of it, at least and I see it as a welcome change, that for the sell trades they have proposed that for, I think the effective date is August, that all the clearing corporations have to get themselves aligned to this new change, is that if it is a sell, block the securities into the client's account and please don't charge margins to it. So at least to that extent, that pressure which was coming on the margins in the cash equity, the regulator is looking at it. And this is what I look at it, that there has been a continuous engagement. They are listening to the issues. See, as a regulator, sometimes if I put myself in the regulator's shoes, they have to look at it overall safety, the trust, and each and every trade has to seamlessly go to the normal clearing and settlement process. It should not fall in between. And that is their focus, typically from a regulator perspective. Having said that, of course, they don't have to make it too tight so that there is, very less room for the players to play around. So they introduced this on the cash market, but on the sales side, now they have worked out a mechanism. They have spoken to the depositories, they've spoken to the clearing corporations, and this is supposed to be effective for August. Now, again, on the buy side, to be again on the fair, to look at the overall settlement process, there has to be some kind of a margin, some kind of a, we all in India as well as globally, we have witnessed the settlement failures, and then, the cascading effect that it has got. And hence, I think to that extent, it needs to, there can't be an era, I feel there will be no margins for sure. Okay. But how to reduce that pressure is something is on the minds. So it has kicked off with the sell side, and on the buy side, let's see how the discussions are progressing. I hope I have answered this question.
Yes, thanks, Vaisshali. So my next question is for Jonathan. Jonathan, being a global company, like in Asia, there are many firms like Nomura, Morgan Stanley, Goldman Sachs. They have placed India as the sweet spot for trading, the Indian market. How does, I want to know from you, what does Citadel think of Indian markets? Okay, the first question. And the second one is, how greater role does a technology play in the growth of Indian markets, and where does it grow from there?
Sure. So for an electronic market making firm that puts technology at its heart of everything, they actually are two and one of the same question for us, really, in terms of like, where do we put India as in terms of an important market? So India is an incredibly important market, both in terms of its liquidity profile, but also in terms of its presence within the global community. So we absolutely are keen to continue and progress and improve relationships and our prioritization of the Indian markets generally. Your second question definitely touches upon one of the factors why we feel that is so critical, and it is around technology. In terms of like 2020 was actually a tough year generally, but definitely with regards to exchange technology, or I should perhaps say more exchange technical incidents. These have obviously garnered a fair amount of attention, but perhaps I can offer a different perspective as a market maker at all of these exchanges. So we do trade across 120 venues across 35 countries. We have a fair amount of experience being at the coalface when these things happen. Ultimately, we actually do stand with a lot of these exchanges in saying that these outages can never be 100% prevented. But we do, so we spend a lot more time speaking to exchanges and to regulators and to interested parties about how can you actually heavily mitigate these outages once it has actually happened, right? So where exchange outages or technical issues do occur, exchanges need to have a much clearer path to resolution. And this is something that we find very critical. I know there's a question that has popped up as well, which kind of like talks about, is the Indian market not considered too volatile for international investment? And this actually goes very much hand in hand with that question. Volatility in itself isn't actually the driving problem. It is the control framework. It is the resiliency. It is the robustness of exchange trading, which really matters. And to give you an example of this, if you actually look at the volatility in the context of March 2020, this is just a drop in the ocean, right? So March 2020 was incredible in terms of the fear that participants had, the lack of direction that people saw in terms of where this was going, and the markets and the exchanges in general performed incredibly well. Right, and this is in large part due to the markets becoming more electronic and the existence of electronic market makers who are able to step in the way that we did. So the resiliency we saw in March would not have been possible just 10 years ago. And I would include India in this bucket as well, and the fact that India is becoming more and more electronic, and that is what is driving increased interest in India. So to throw you a couple of stats as to why like India is an important market, but also isn't considered too volatile for the international community. In the US equities in March 2020, we handled more than 20% of equities volume traded, and our trading volumes averaged 3.3 billion shares a day in March, compared to 2 billion shares handled on our busiest day in 2019. So that kind of like sets the context as to where we are now. We saw significant volume across all other asset classes as well, with our spot FX volume increasing 110% in March alone versus January and February previously. So again, I do think that to answer your question, to answer all three questions, I guess, in the same kind of like context, technology is incredibly important. It actually is highly correlated with the attractiveness of the market, and is also perhaps indirectly correlated with I guess the volatility being a negative factor. So volatility becomes just an interesting variable for investment opportunities. But if a market and exchange has the right controls in place, the right capacity and investment in infrastructure, then in fact, volatility will even drive further opportunity and attractiveness in that particular market. So we spend a lot of time talking with exchanges, particularly in India, around technology, with our key points of advocacy always revolving around being more deterministic, be more transparent, and create a fair and equal environment for all participants. Something we're pleased to say India is very much on board with.
Thanks, Jonathan. So now coming back to my next question will be, equally for Sandeep and David. So I have one question for David. David, our currency, which is the USD INR, is the only currency which is traded everywhere across the globe. It is traded on NSE, BSE, DGCX, CME, SGX, everywhere. What are your plans? We don't have one currency, which is the INR CAD. So as I believe TMX can do that. So what are your plans for, launching up INR CAD as a currency derivatives futures for Indian market?
Once again, we have this question, Sai, that we've discussed for the last 3 years. We have no plans, quite frankly, at the moment. I'd love to say yes. I think it's certainly something now. I think the issue that we had, so we didn't have a base really to explore, India out to Australia on a time basis. We didn't have the markets open for a start. We didn't have people on the ground. There's only so much I can do coming over 4 times a year or whatever, So I think it's part of the evolution process. You and I have discussed various things we have been in talks, and we will continue to be in talks with some of the local exchanges that have been mentioned on this event to see about listing and dual listing these things. I think these things have to be taken with an air of caution. We have no plans to list an INR CAD, but that would be the obvious offshoot once we had a product. I think the obvious one would be, for example, a dual listed product a CAD denominated Nifty or whatever, then an INR CAD cross. Or,
Nifty and CAD, yes, absolutely.
This would be the obvious thing. I think we were probably frightened off by SEBI before with what happened with SGX. So look, never say never, Si. But I'm sorry to disappoint the audience at this stage, but not at the moment. I think it's very important that we have. You've touched on something that's highlighted a lot at the moment internally at the exchange, that we need to be relevant. You know, we have what we have in our domestic market. We have CAD denominated. Obviously, all our products are CAD products, interest rate products, index products, stock products, etc. But I think, you know, the next stage for us, and we're looking very closely in the product teams, is what can we launch in local markets in India and further in Asia that is really relevant to the traders down there. You know, for example, we're an economic, we're a commodities powerhouse as a nation. We don't have a commodities derivative, which surprises a lot of people. You know, all our commodities are expressed in our cash market. We own three cash equities markets under the TSX group, TMX group, and the Toronto, the TSX being the largest one. So nothing at the moment, Si, but watch this space.
Thanks, David. And my last question
over to you now.
Yes, my last question to Sandeep. So Sandeep, how can an individual or a company, so we need to know what are the exchanges apart from India, okay, what are the exchanges I can access as an individual or as a company from GIFT? So if I want to trade CME, DGCX or ICE or TMX, how can I access that? Is there any brokers who have set up the shop, you know, are giving access for Indians for trading offshore? How it is?
Sure. Yeah. So I think, as rightly mentioned earlier, financial market is now a single market. It's not a country-specific market. So what we are looking at is to connect with the various global markets, and that's how some of the connects have been established. NSE Singapore Exchange is the latest one, which will be reality very soon. Now, you know, they have been working very closely and aggressively to bring the Nifty trading volume on the NSE exchange. Right now we are working on two aspects to access the global markets. What regulator today has permitted is to allow exchanges to set up a kind of a subsidiary company which will have access to the multiple markets overseas. So one of the exchange in IFSC, which is India International Exchange, has created a subsidiary called India Annex Global Access, which is connected with the various global exchanges, including CME and many other exchanges, through which the intermediaries set up in IFSC, you know, the stockbroking firm set up in IFSC, can become a member of this subsidiary company which is set up in GIFT and can access those the markets which have been connected through this subsidiary. However, our ultimate aim, and we are evaluating the proposal where how can a broker sitting in GIFT can access the markets directly, you know. So the first phase where the exchanges have already connected with the markets and through which the access have been provided. In the second phase, we are trying to see, can a broker sitting in GIFT access, become a member of the overseas exchange directly and trade some of these products. And parallelly, the exchanges are also working with some of the international exchanges in terms of the dual listing of some of the products, you know, including that and other commodities as well. So these are the three parts under which we are trying to see if the access can be provided in the other global markets.
Thanks, Sandeep. So finally, the session is over and I'd like to end the session. Thank you all of us for joining us. And now I would like to, so after this, even there will be a presentation from Hemal Randerwala, who is from Go Dharmic, who is a non-profit organization. Hemal's Go Dharmic, you guys might not know, when there was a second wave in India in the month of April, Go Dharmic have helped a lot of Indians, you know, supplying oxygen when there was a oxygen crisis and medicine crisis and everywhere across India. Go Dharmic, their volunteers across India, not only in India, even in UK and across the globe, they have helped everyone with oxygen cylinders, with medicines, with injections, with every possible, with food. And before COVID, they have, helped to build libraries, help underprivileged children, get the education stuff. So Go Dharmic, from last 6, if I'm not wrong, 6 to 7 years, being, actively helping. It's a non-profit organization. So Hemal, who is the founder of Go Dharmic, will give a brief presentation about what Go Dharmic is. And, over to you, Hemal.
Thank you very much, Sai, and thank you to FOW and the Global Investor Group for the opportunity. It's nice to be with this event, and we had a lovely dinner together in Mumbai in 2019. And I was really hoping that we'd get to do it again this year in Bandra, but unfortunately we couldn't put it together. Hopefully we can all be together for it next year. So I'm just going to share my screen. If somebody wouldn't mind, just give me a shout that you can see it. Is that appearing okay? Sai, can you see that okay?
Yep.
Oh, great, thank you. Okay, and we're going to go full screen mode. Perfect. So just a little bit about what Go Dharmic is and what Dharma means, really. Like, it's a universal idea from the Sanskrit tradition that means to support or to sustain or to restore. And in this world of ESG, this is the most important idea for us all universally, to be able to act in a manner which is sustainable. We've been very fortunate to work with wonderful partners and organizations, both public and private, and especially the financial markets, organizations, companies, exchanges have also supported us in a great way. So it's been really kind. So Go Dharmic is 10 years actually this year, and what we've tried to do from the beginning is inspire compassion in action. It's about creating a little bit more of an environment where we can work with the same skill sets as we do for the financial markets that we operate in and the work that we do, but to do it for a wider audience, to do it for other people outside of our own selves, and to think about, how do we impact people? I mean, we're all very fortunate to be in this space and to be, working here. And I think if we're at an event like this, or, we're part of a privileged community, and therefore it's incumbent on us to do whatever we can to help others. And all we've tried to do for the last 10 years is try and think of ways to utilize our experience, skills, network, ability that we've got from this space here in the financial markets, and then bring that to a wider audience and, encourage other people to join us on that basis. So it's a very basic concept of compassion, not only in words, but in action. One of the most important aspects for us is leveraging technology. As the financial markets have already migrated towards tech, I believe the non-profit sector also has to take that direction and utilize everything they can to increase transparency. I mean, there was a survey done by a top US university last year, which said that 70% of people have negative thoughts about the charity sector. High administration costs, lack of transparency, lack of visibility of action, but yet not many people actually want to go in and engage in that sector and find out where they can improve things, or, as companies drive in to find out how we can kind of reduce risk in terms of cost and integrate technologies like blockchain into the nonprofit sector. So two of the major projects that we've worked on is creating a CSR dashboard, which can give end-to-end data of where supplies are where supplies are purchased for the utilization of our projects, as well as give reporting on each and every aspect of the work that's being done. So every one of the 74 libraries that's been developed is visible on the platform, the locations, the number of books at each place, the number of children that are helped, the number of people that are affected, and every penny of the donations of where they're going. And then secondly, we've launched an app which helps our volunteer community engage with each other and for people to request help when help is needed in a certain place. So with this India crisis, which I'll come on to, we were quite ready and poised to be able to act, because there's a community of people that's been developed, 3,000 people who contribute to and have helped over the years in various capacities. So, you know, when a situation does arise, you have a community of people who are on the same page. They know what to do, and, you know, they have the skills to be able to help, and that's volunteers as well as staff. So just a little bit about what we've been able to achieve over these past years. We're distributing in the UK, in the last year over COVID, over 1 million meals have been distributed to vulnerable people. There's a big thing about school children just right here in the UK, where, you know, many cannot afford to feed their children who are going to school. So, you know, we're doing a big piece of work around that. And in India, there's volunteers across India in almost every state that's been active. We have a project in Rajasthan at the moment to help particularly girls' education. It's alongside Vedanta, and we're developing 900 libraries for underprivileged schools and transforming those spaces really into better environments, right? Like, for a school shouldn't look like a prison cell floor. It should look like a warm, kind, you know, comfortable place for children to enjoy their education. And that's something we feel really strongly about, creating confidence, creating the joy of learning, and giving especially girls access and opportunity towards books and reading. And just more recently, Indian schools have been closed for 1.5 years. It's been devastating for children across India who have no access to education. We're launching a digital project where children can learn from their parents' smartphones and have access to just some basic form of education. So it's an absolutely critical situation in India, where there could be a generation of children that don't get access to the early critical learning period. Sanitation, we have a plan to develop 40 toilets across Assam. Again, giving girls access to clean toilets is very important in schools, and something we feel really strongly about, and improving sanitation wherever possible. Across this pandemic, India has been a big focus and a place, but you know, we've tried to broaden access to the market, if it were, and try to find ways to kind of serve and create programs for service in different places, operating from the UK and getting a lot of support from different people. We've had voluntary efforts in multiple places. Over this pandemic in India, here is the analysis of the work that we've done. We've had an incredible partnership with Uber, and they have been instrumental in giving us mobility support and transportation support, along with many other financial market firms. I should name a few. Futures First has been absolutely incredible. Tower Research Capital have been incredible in supporting quickly and decisively to ensure that we can move forward. ST Advisors has been a crucial partner with the CEO, Sandeep Tyagi, has been literally one of the team working, you know, on the ground, helping us to source and supply and build contacts so we can make a real difference. And I think it's that we can do from the financial markets, to really come in and give a personal touch and use the skills that we have to deliver response to people. Obviously, with the environment being such a precarious situation at the moment, we must do everything we can. It really is a desperate situation where these cyclones are, like the last cyclone that hit the east coast in India, put 500 villages underwater. And we saw firsthand through the volunteers the kind of impact that had, together with COVID hitting. And now there won't be a huge media attention on these kind of places. You know, they're remote villages where they don't get you know, so much media attention. It's far away from the capitals and the major cities. But it's important that, you know, we realize that there's diverse ecosystems out there that can affect the mainland and can create huge damage across the board. We've seen flash flooding here in the UK. We're seeing it in Germany. It's just had terrible floods. We have to protect these ecosystems in the best way possible. So I did want to keep it brief and short, and just to share with you that, you know, it's absolutely heartwarming to see the response of the financial market community towards trusting Go Dharmic, as well as coming forward to help people. Some of the nicest people I know are in the financial market space. I think there's a lot of a bad reputation in the general sphere, saying that, you know, it's only about money and it's only about creating profit and nothing else. But some of the best CSR comes from financial markets, and it's the focus on social impact is really important. What I would say is it's great to see this event being, you know, India and the international community linking up more and more. And just this picture, with I was not sure about putting it up initially, but it just shows that, you know, whether the kids in the picture are saying peace, you know, but in the UK it means something else if it's pointed the other way around. So, you know, whatever they're saying, you can take it as you will. But I think please do come forward, help us, and thank you to everyone that is currently helping. Bye-bye.
Thank you, Hemal. That was very insightful. And thank you for sharing all the great work that Go Dharmic are actually doing globally. It's a pleasure to see that and hear all of the great developments that the difference you're making to people's lives. That concludes our session for this morning, or our first part one session. I'd like to first of all go back and thank Sai for moderating our opening panel discussion. That was a very useful and informative session. I'd like to thank our panelists, Vaisshali, we've got Sandeep, David and Jonathan, for sharing their insights into sort of growth developments and opportunities in the Indian market. All sounds very optimistic and very positive, so great things have been happening, and no doubt we're in for a brighter future. Thanks also to our delegates for joining us for the first session and for sharing your questions with the panelists. We hope that you've been able to take away some useful nuggets of information, and we will be now taking a very short break, and we'll reconvene in 20 minutes at 11 o'clock, where our next session will in fact be touching upon some of the topics that have been discussed by this panel, which is looking at Indian regulation, and also how technology has assisted in the Indian derivatives market development. Absolutely a fundamental topic, and one which Jonathan touched upon and some of the other panel members a few moments ago. So please do continue to join us in 20 minutes or so, whereby we'll be continuing that discussion topic, and we look forward to seeing you then. So thanks again to the panel this morning, and we look forward to seeing you shortly in about 20 minutes. Thank you.
Thanks. Thanks, Annie.
Thank you.